Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Monday, August 30th, 2010. Well, nobody bought Bernanke's head fake on Friday. The market sold off 141 points to 10,009, just at that 10,000 mark. We're getting close. And the S&P was down 16 to 1049. The NASDAQ was down 33 to 2119. Oil was down 92 cents to 74.25. Gold was down $1.50 to 12.37. And silver was down 2 cents to 19.01. Still above 19 though. Silver's holding up very well. It's been on a tear lately. Volume on the New York Stock Exchange was 3.1 billion. The NASDAQ was just over 1.4 billion. So volume was a little bit light but fairly healthy. Treasuries, yields were down and prices were up. The 5-year was 1.39, 10-year was 2.54, and 30 years 3.6. 3.6% for 30 years of risk. Sorry, I'm out. On the currency front, the dollar was stronger against the pound and the euro, but weaker against the yen. Personal income came out at 0.2%. Survey was a little bit higher at 0.3%. But the Dallas Fed manufacturing number came out at 13.5. Survey was for 10%. So it was lighter. And it just goes to show you that our section of the country, here in the Texas region, one of the strongest regions in the country, is also getting weaker. Europe was a mixed bag today, and generally the financially conservative countries like Germany and England were up, and the more liberal countries like Italy and France were down. Asia was up across the board, with Japan being up 1 3/4 and China being up 2. And that was off the heels of the Bank of Japan's announcing that they're easing and they're going to do more stimulus. Because it worked so well for the last 20 years. Over the weekend in Jackson Hole, central bankers from around the world met for their annual symposium. They didn't exactly exude confidence. They were arguing about how to jumpstart the global economy without creating asset bubbles. Also today, at the closing bell, the HUD secretary floated the idea of another homeowners tax credit. The government is just desperate to figure out how to jumpstart the economy, and the economic data keeps coming out worse and worse. It is a very risky time to eke out gains. Right now, as I said before, it's about preserving principal. I would be fairly conservative right now if I were you. So I wouldn't own a lot of stocks, and I wouldn't own long-term bonds. This has been Dan Stewart for your NORAM Asset Management Market Update, Monday, August 30th, 2010.